The numbers in this prospectus are large enough that the document itself seems to brace for disbelief. A first quarter net profit increase measured not in percentage points, but in a multiple exceeding 16 times. The prior year's entire result is the first figure the filing asks you to hold. That document is the Star Market Listing Prospectus, filed by the Chinese memory manufacturer in May 2026, and it records a raise near 30 billion yuan, revenue growth across the same interval described in terms of multiples, and a company that now ranks itself fourth in global memory production. We're going to read that filing twice, once for what it establishes line by line, and once for what its careful accounting conspicuously leaves uncalculated. The silence in this prospectus is not where the numbers are missing. It is where the numbers appear without the denominator that would tell you what they mean. The headline tables establish the profit figure first. First quarter net profit rising approximately 1,688% year over year, with the filing presenting this not as anomalous, but as confirmation of an inflection the company had been projecting. The document does not present these figures as exceptional in tone. It presents them as a trajectory arriving on schedule. Alongside the profit line sits the revenue figure, growth across the measured interval described in the filing, in the language of multiples, not incremental points. Both figures appear in tables the prospectus characterizes as audited. The market position disclosure follows. The filing ranks the company fourth in global memory production and first among Chinese memory manufacturers. That ranking appears without qualification. The prospectus states it as a fact about the competitive landscape, not as a snapshot that might shift, and the language surrounding it does not hedge. A company that was near absent in global memory production roughly 5 years before this filing now appears in a ranked position alongside companies that have built that industry across decades. The capital raise section states deployment toward capacity expansion and process development, framing the 30 billion yuan raise as the logical next step in an already established trajectory. The document does not describe this as a rescue. It does not describe it as a pivot. The language is that of a company scaling something it has already demonstrated. And the forward guidance section continues in the same register. Continued growth projected in multiples through the first half of the year, with the filing measuring that guidance in terms that assume the current revenue environment persists. The document records this as an operating projection. It does not frame it as a scenario. On a plain reading, the prospectus is a coming-of-age document. A company moved from near absence in global memory to a ranked position in approximately the time it takes to build a single fabrication facility, and it is now raising capital at a scale that implies the market believes the trajectory continues. The filing supports that reading with figures it presents as audited and guidance, it frames with confidence. Reading it again, the first thing missing from the profit analysis is the decomposition. The filing records the 1,688% increase. It does not disaggregate how much of that increase reflects the company's own efficiency gains, and how much reflects the broad contract price environment in memory that lifted every maker's margins across the same period. Memory contract prices roughly doubled from their trough through the interval the prospectus measures. That doubling is not the company's achievement. It is the market's movement. The document records the profit. It does not print the calculation that would separate the two. The risk factor section does acknowledge commodity price sensitivity. The prospectus notes that prices are a risk going forward, but the general acknowledgement and the specific decomposition are not the same disclosure. The filing says prices could fall, and that would hurt results. It does not say how much of the current result disappears if prices revert to where they were 18 months ago. Those are different statements, and only one of them appears in the document. The competitive positioning narrative carries a similar precision. The filing states the company's ranking without stating the process node gap that the ranking compresses. It does not disclose at what technology generation the company is producing volume, nor how that generation compares to the leading-edge nodes the companies ranked above it are currently shipping. Fourth in the world in memory production is a statement about volume. It is not a statement about whether that volume is sold at the same price per bit as the companies ranked above it, or whether the margin structures are comparable. The prospectus presents the ranking as a competitive equivalence the text does not actually establish. If you place the prior year's quarterly profit in one hand, The current quarter's result would require a room. The filing prints both numbers. It does not print the room. And the revenue growth figure, 700% across the measured interval, spans a period in which the company was simultaneously expanding capacity and benefiting from a favorable price environment. The filing does not separate volume growth from price-driven growth. Both are present in the number. The document is not required to make that separation, and it does not. Every memory company reported strong results across this same window. The prospectus gives no guidance on how this company's revenue growth would appear against a peer-normalized baseline. That comparison, the one that would establish whether the company outperformed the cycle or rode it, is not in the filing. Consider reading an income statement during a scarcity year without being told there was a scarcity. The yield figures are real, the revenue is audited, the market position is accurate, but the price per unit reflects the absence of supply, not exclusively the producer's productivity. The document would be telling the truth and leaving out the weather. The decisive omission is the prospectus's treatment of the shortage itself. China's restricted access to advanced memory from foreign suppliers operating under export controls created a domestic demand pool that this company serves without competition from the makers that would otherwise price it out. The filing records the revenue that condition produced. It does not name the condition. The word shortage does not appear in the role it actually played. The export control regime that created the addressable market the company expanded into is present in the filing as a background risk factor. It is not present as the explanation for why the profit exists at the scale the headline reports. The record also does not settle whether the process node gap to the companies ranked above it is closing, stable, or widening. Independent analyst estimates on that point vary, and the filing does not supply the technical specifications that would resolve the question. The document does not disclose customer concentration at granular enough resolution to establish what portion of revenue flows from state-affiliated procurement versus open market buyers, which would bear directly on how durable the pricing environment is likely to be for this company specifically. The filing may be amended or supplemented before or after listing, and certain silences may reflect timing rather than deliberate omission. An absent figure in a prospectus is not proof of concealment. It is proof that the figure was not included, and the record does not tell us which explanation applies. What the prospectus leaves uncalculated, taken together, is the denominator question. The single calculation that would establish whether these earnings represent a durable competitive position or a favorable cycle position. The filing is careful, across all of its disclosures, never to perform it. Read plainly, this prospectus documents a real industrial achievement. A company reached global ranking in memory production in roughly the time it takes to build a single facility, and it is now raising capital at a scale that implies the market believes the trajectory continues. Read against its silences. The filing documents something the prospectus itself cannot quite contain. A profit whose relationship to the restriction that enabled it is written into every revenue line and named in none of them. The wall produced the capability. The capability generated the profit. The profit is in the filing. The wall is in the margins. What the document records as a financial milestone, the document's silences record as a market condition, and those two readings have not, as of this prospectus, been reconciled. The next document worth reading closely is whatever the company's peers file in the quarters following this listing. Specifically, whether those filings contain the price decomposition language this prospectus omits. That comparison would tell us whether the omission here is industry standard practice or a choice particular to this filing. If you read documents the way this channel does for what they establish and for what they decline to establish, subscribe and turn on notifications, because the next filing is already in the queue.